What's going on, everyone? In today's video, we have some important things to talk about. The market has been so crazy lately and it's been trapping a lot of people, but today we're starting to see some very worrying signs that can really heat things up. So you guys better stick around with us all the way to the end. We're going to be talking about some awesome predictions for tomorrow, but like I said, we also have some very important things that a lot of people just don't see coming. So with that being said, Tom, let's jump right into it.
Yeah, that market was insane today. We started falling pretty much right whenever that inflation data actually released, and it showed that inflation was rising a little bit. But I want to go over the market price action just a little bit before we get into all of that juicy data. So stick around here, but that SPY rejected right around 437.20, and ever since that main rejection there, we started falling off to the downside. And there's a very, very interesting thing that happened today with bonds that everybody needs to pay attention to. So let's go, Mike. The SPY had a big drop to the downside, and these yields were the main reason why we're flying up today. Look at the US 30Y. This is exploding, and we talk about TLT all the time. And look at how low TLT got today. I mean, it's another bad move away from making new lows again.
Yeah, it's rough. And for those of you who've been watching the daily videos, you guys can already predict what I'm about to say. And we've been saying time and time again that when you see TLT drop in a major way, that is bad for the market, because when TLT drops in a violent way, it means interest rates are rising. And guess what happened today? TLT tanked down, and the next thing you know, the market tanked right down with it. And talking about what we're actually seeing on a more specific basis, I guess you can say, is there was a treasury bond auction today, and the government's trying to sell their bonds, and basically no one wants to buy them, right? And when that happens, what does the government have to do? They have to increase the interest rates on those bonds. And the problem is that this is a really bad sign, because when you have nobody wanting to buy the government bonds, obviously it's just a bad sign to begin with, but it also puts the government in a really tough position, because then they have to increase the interest rates on those bonds even more. And when the interest rates rise, it affects everything from stocks in a bad way. It makes mortgages more expensive, and it literally affects everything in, especially right now, a bad way.
Yeah, exactly. Then when you say bad, in an intraday standpoint, that was a terrible move down that we saw in the SPY. And it was just like all across the board, all the big tech stocks started really getting destroyed after having a fairly good day. Like Nvidia, Apple, Adobe. There was a lot of tech stocks that were actually breaking out in an insane way, and the market just kept getting hit. And you can see the QQQ actually tried to run up a little bit right before that big auction ended up happening. And Mike, that auction really drove those yields back to the upside again. And we don't know for how long that this is going to stay true, but who knows? Like, these could end up coming right back down tomorrow. If we go to these yields and we go to like a daily chart on TNX, I was actually getting pretty hopeful that this would be somewhere around the top for some of these yields, and I still think it might be. So just give it some time, and let's let some of these events play out, and maybe it'll go a little bit better for us.
Yeah, and what's interesting is as yields rise, guess what else rises? The U.S. national debt. Right now, the U.S. is currently paying $883 billion a year in interest alone just on its national debt. And just a couple years ago, unfortunately, this number is at like $482 billion, but it's just rising higher and higher and higher. So it's not good at all. And if it keeps, trending at its current pace, it will soon be the largest expense for the government, and it'll surpass Social Security. So gotta love it, right?
Oh my gosh, larger than Social Security. I mean, that now you're getting out there, Mike, but that is insane, just the rate that this is going. And everybody keeps talking, because it keeps getting brought up a lot lately because of these funding bills with Congress. Don't forget, they're still trying to put a new speaker into the House right now. Scalise didn't get the votes I saw today. There's a lot going on there. So I don't blame it, Mike. I mean, I think it'll hit $1 trillion soon. It seems like that they're spending, it might dip for a little while on this interest, but it always ends up going back up, it seems like, over the longer term. So unless they just totally shut things down, it's going to keep going up. So we'll be at $1 trillion before we know it. And it gets scary for the market whenever you think about the implications that this has for the longer term. Like at some point, what's it going to be next? 2 trillion over the next 10 years at this rate? Like, it's nuts.
Yeah, it's horrible, but I guess shifting over on a more optimistic, but I don't even know if I call this optimistic, to be honest. Basically today, one other key event in the market was the inflation report, and basically the Federal Reserve has been at war with inflation over like the past, we'll call it 2 years now. And this inflation reading wasn't bad. It came in around like 3.7%, and it was expected to come in around like 3.6 to 3.7%. So it's not horrible, but what's interesting is that over like the past couple months, the inflation rate has actually been increasing relative to where it was like in June of this year. So basically inflation is like calming down in the grand scheme of things, but at the same time, it's like the job isn't done, and like there's no reason for anyone to be celebrating right now, and the market kind of just was like, didn't really care for this data today.
Yeah, it didn't. And whenever you go through and you look at some of the individual increases, like overall, like food increased 3.7% year over year. And you can look at all the individual CPI numbers if you want to. There's a few articles out there that have this in there. But I saw that core CPI actually rose a little bit, but that overall inflation reading stayed right around 3.7%. So I didn't think that it was that bad. But hey, the market definitely reacted in a negative way. But I will say stocks were doing pretty good throughout the morning until that auction happened. Like at least Apple, shrugged it off, and Nvidia shrugged it off, and Adobe and a few others. It was actually a pretty good day for tech until that treasury data happened.
Yeah, no doubt about that. But going into tomorrow, we do have a lot on our schedule, especially when it comes to the earnings side of things. So tomorrow is like the official kickoff day for the earnings season, and we have the big banks set to report before market open. So we have JP Morgan, Citigroup, BlackRock, Wells Fargo, PNC. So keep a very close eye on these ones. Out of them all, I would say to watch JP Morgan the closest. Ticker symbol JPM. This is one of the bigger banks out there, and they normally have some of the most like liquid options when it comes to trading. And if we see these banks dip down in a major way, obviously that wouldn't be good for the bank stocks, but it would also kind of give some nasty warning signs about the economy overall. These bank stocks have been recovering a lot over like the past year or so, but again, they're nowhere near their highs. At least most of them are not. And when you compare like the bank stocks performance compared to some of these tech stocks performance, it's night and day.
Yeah, it really is. And lately, JP Morgan has been really dipping down quite a bit, kind of with the overall market. And I think that they will actually dip down tomorrow, and I'm not saying to run out there and start buying puts or anything like that, but I just have a hunch based on how lending has probably been going over the past few months with all these yields and with all the interest rates being so high. I think that that's going to hurt them a little bit on the earnings. So I'm curious to see how this goes, but it's going to be a big day for earnings, like you said, Mike. The banks play such a big role in the economy and in the overall market, so be ready for that. Now, keep in mind, it might not affect QQQ as much, but it'll definitely hit that SPY pretty hard, and I think that banks falling early on today were part of the reason why SPY was dipping down so much at open.
Yeah, no doubt. Well, Tom, let's talk about the fun stuff now, right? We have one more day left this week. Let's make it count, all right? So some setups I'm watching pretty closely, or at least the first one I should say, is Meta. So Meta is a stock that has had a tremendous recovery over the past year. Back in like October, or you could say like October to November of 2022, this stock was in the dumps. It was at $90 a share, and ever since that point, it has been on basically a nonstop uptrend. And now it's at $324 a share. So while this recovery was awesome, I think it's starting to run out of fuel, right? I'm not necessarily someone who thinks, all right, Meta's going to crash and burn, but I can definitely see a pullback in the short term. So I am watching this one pretty closely for a move back to the downside. I would not be surprised at all if we did see like a retest of like the 315 area to start off, and depending on how good or bad the overall momentum is, that can change things. But with everything being said, I think the bearish setup on Meta right now is pretty tempting.
Yeah, I actually like it a lot as well, and that pullback end of day today kind of made it even more enticing for me. So I love it to the downside tomorrow, Mike. I'm kind of bearish on tech over the next couple days as well. But with one setup, I'm actually going to go with a bank stock, and that's Citigroup. I noticed they were kind of channeling here, and I know that they're going to have earnings tomorrow morning, and this is going to be kind of like a post-earnings reaction type of play. So I'm watching this very closely. If they start to fly under support here around 41, then I'm going to eye up some puts. Now, if they end up moving up in a big way with earnings and they break 42, then I might look at the bank stocks back up a little bit more. I like Citigroup, and I think it's in a good little channel here to play with those earnings coming out.
All right, sounds good. Another stock I'm watching pretty closely is WEAT. So this follows wheat, and basically, whenever there are, I guess you could say updates or developments, especially in Ukraine, wheat can move up a lot. And basically, we saw a pretty nice pop to the upside today, and but basically, it is pretty oversold in the short term. And I think that it has a really good risk-reward setup to the upside going forward. Right now, it's at like $5.80 a share. You can put a stop loss right around like $5.57 a share, and your profit target could be all the way up to like $6.40, or if you want to get a little bit greedy, closer to like $6.90. But overall, I think the risk-reward's pretty good.
Yeah, it's awesome. I think that whenever you zoom out on like an hourly chart and you see how oversold it is and how all these situations are starting to play out, and you see that nice uptrend here, I think it's very enticing on wheat. So I will keep it on the radar, Mike. That'll be a fun one to watch tomorrow. But with my next one, I'm going with QQQ actually, and I'm looking at an hourly trend line here that QQQ has bounced off of. I was going to say resistance because it did hit off resistance as well, but it's hit this trend again. It's bounced. This is going to be now the first, second, third hit after the initial drop there, and I really think that this is an interesting setup. If we start to really break out to the upside over the next few days, I think that could be awesome for QQQ and maybe start another, small uptrend. Some of these stocks have been seeing some good movement lately, and if those yields start to fall, you would think maybe we'll start to break out here. But at the same time, if this holds up and we start to see those bank stocks push down tomorrow, I'm going to be pretty enticed to play puts on QQQ and these tech stocks. I like your play on Meta, Mike. I think that's even a very enticing one for tomorrow as well that kind of follows QQQ in a way.
Good stuff. If you guys, for some reason, are not in the Stocked Up Discord already, you have to join. It's going to be that first link in the description in the comments down below. It's completely free. We have a bunch of amazing people and members in the chat. Basically, you can network with other traders. You can get free day trades. And if you want to just chat with Tom and myself, feel free. We're in here all the time, but definitely join up if you're not already in the chat. Again, we do have free day trades in the morning every single morning, so make sure to join up. But back to the video, Tom. It's now about that time for the momentum plays, and with today's first one, we have Amazon to the downside.
I like that double bottom here on Amazon. If they break under 131.30, then I'm going to look at those puts. It's just under that low of day.
There we go. With the next one, we have GLD to the upside.
Yeah, GLD, I like how it has that triple bottom here intraday around 173.30. If they end up breaking back above 173.50, then go ahead and look at those calls.
All right, and then with the last one, we have AMD, a stock you never heard of, Tom, for both directions.
Yeah, both directions, of course. Go ahead and make them break under 107.50. That's the low of day, right around support there as well. But to the upside, we got to watch 110. That has been a huge level on AMD the past few days. So if it can magically get above 110, then go ahead and eye up those calls.
If it can magically get above 110. Yeah, I mean, it's been pretty choppy lately. So we'll see with this one. But either way, keep a close eye on it. But it's now about that time for the big money $2.7 million trade of the day, and we are looking at ticker symbol KWEB. Basically, some giant institution or big money trader put $2.7 million into KWEB, and they're hoping that this stock rises. For those of you who don't know, KWEB is an ETF that follows China stocks, and recently China has been stimulating their economy. Overall, I think the risk-reward setup on these call options are pretty good. There's a 28 strike calls for December 15th of 2023. These calls are close to the money. They have some time, and I think it's a stock that everyone should be watching pretty closely going forward. And what's nice about this stock is that it doesn't always move with like the U.S. market, which is a good thing, especially in these choppy times.
Yeah, that weak correlation to SPY is actually pretty striking there, and I'm hoping that they can continue back up. I know that these China stocks were doing fantastic until today, where they had this big dip, and it looks like the big money's entering on the dip, maybe buying up the dip a little bit. I know people love to throw that term around a lot, but looking at Queb, I think there could be a nice move up as well. And I love it that it's the Chinese market. A lot of people are scared of the U.S. stocks right now. Maybe we'll start to see some money flow into this. I think that they could do a little bit better here over the next couple months. And you can see this big support where they've been bouncing nonstop, and we're about to be testing that again.
Yep, so keep a close eye on it going forward. But, like I said a couple minutes ago, guys, we have one more day left this week. I know a lot of this week was pretty choppy, and, that's just what happens sometimes, So if you've been struggling, it's all right. Brush yourself off and be ready for tomorrow. What's nice to see is that even though most of today was choppy, we did see some really good price action when we saw rates rise. So, if you have been struggling, feel free to keep like an extra close eye on TLT, because that has been like the ultimate signal, you can say, as of lately, and it makes sense. If you see interest rates rising a lot very quickly, it's not good for anything. So, it makes sense to look at TLT as a guide. Again, when TLT falls quickly, it's bad for the market. But when TLT rises, it means rates are falling, which is at least a little bit better for the market.
Yeah, exactly. And, if you go over to like a chart of yields, whenever people say yields are high right now, they mean like you look at TNX, you look at US 10Y, US 30Y. This is what they're talking about being so high. TLT inverses this essentially whenever those bonds become, well, not worthless, but just not worth trading, right? So I like this, Mike. I hope that we continue to see TLT down tomorrow, but I hope that over the longer term, TLT starts to pop up a little bit. But heading into tomorrow, don't forget about the bank earnings. They'll be coming out before market opens in pre-market, and it should be pretty wild with those coming out. And don't forget, there's even some pretty crazy news with it sounds like Israel and Hamas again, so keep that in mind too. Tomorrow might get a little crazy.
Yeah, we're kicking off earnings season. So tomorrow, Friday the 13th, will be an exciting day. I hope you guys are ready. Again, if you're not in the StockedUp Discord already, make sure to join. It's that first link in the description in the comments down below. And last but not least, I want to give a giant shout out to today's member of the day, JOS, in the StockedUp Discord. You've been in the chat for a couple months now, and you've been an awesome member so far. So make sure to keep it up, and huge shout out to you. Besides that, thank you guys so much for watching, and let's crush it tomorrow.